Hello and welcome back to the Note at the beginning of what is likely to be a very quiet week on the markets as the Christmas holiday approaches. Very little went on today, but we did see one significant landmark, which was, as you can see, that Brent Crude dropped below its low for the 2008 financial crisis. It's now at its lowest in more than a decade, and perhaps the alarming news for those who follow charts is that there's still no necessary reason to think it has to stop here. It was considerably lower even than this for a few years at the beginning of the last decade before the invasion of Iraq. Now, the falling oil price has had a number of casualties, and I'd like to take a look in particular at master limited partnerships. What we're looking at here is how both REITs, real estate investment trusts, and master limited partnerships, which are vehicles to invest mainly in oil pipelines, which pay out a very regular income, how they performed from 2010 through to when the oil price peaked in 2014. And you can see that both were regarded as great yield providers, and both moved almost exactly in line with each other, even though obviously the oil pipeline market and the real estate market have many differences. People were excited by yield and hunting for yield, and also took seriously the notion that the income you get from an oil pipeline isn't directly dependent on the price of oil. Providing the oil keeps flowing through it, you should get paid. If there's a very big disruption to the market, however, it could be a different story. As we can see, if we now look at, if we take this chart through to the present day, master limited partnerships at this point are actually below their level from early 2010. You can see that real estate has continued to rise somewhat from there. Not all yields are created equal. If you do want to hunt yield, and there's every reason to do so because there's precious little yield available in the fixed income market, still don't just look at the percentage income that's on offer. Look at where that yield comes from.